Hi, this is Ripe Trade, and I just wanted to quickly go over a test to show how bonds have historically performed when inflationary concerns are high, indicated by a rise in gold stocks, and how bonds have performed when inflationary concerns are low, indicated by a decline in gold stocks. All right, so for the test, we're going to test this on the 30-year long bond futures. And all the test results are going to be based on one contract trade. The exit is going to be the same. The exit is a simple 30-day exit. And as a baseline, what we'll do first is just test a simple random 30-day holding period to show you, what to compare the results versus. The average trade for a random 30-day hold in the bond futures is $469. All right, and then the first entry rule that we're going to test is how bonds have performed after the 30-day rate of change in the XAU is up by X%. All right, so this is the rule. If the rate of change based on a 30-day look-back period is up, and then once we do that, we can test from 0 to 30% in steps of 1. All right. Run that test, and you can see if I sort this column here by average trade size, you can see all the trades are smaller than that baseline $469. The highest average trade was when the XAU was flat over a 30-day look back. The worst average trade size, minus $1,500 per contract, was 19 days, but you can see the 30-day is right there. If we run a chart of it, you could see that it's a pretty linear distribution. The further the XAU is up, you can see this axis here shows you the percentage that the XAU is up. The more the XAU is up, the bigger loss per contract in the long bond futures. So when the XAU rises, bond prices have typically gone down. And then if we check the opposite, if the rate of change in the XAU is down X%, and then we're going to test it from minus 30 to 0 in steps of 1. Again, if we sort this by the average trade size, you can see the highest average trade was when the XAU was down 30%. And the smallest average trade was $983, more than twice the size of the baseline, and that was just when it was just below being flat over the 30-day period. Again, if we chart this, you could see what the slope of this line looks like. The more that the XAU declined, this axis here, that's minus 30% right here, the higher the average trade size. All right, so basically what this is telling you is when the XAU is down more over a look-back period, you should expect an advance in bonds. Okay, I hope you enjoyed this video. Come check out our blog at www.ripetrade.com.